BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. Going to have a look just mostly at Bitcoin, Ethereum, and there's not really much else to say that we didn't say about it yesterday, so just in a nutshell if you didn't see that. So we had this big box, the box what I thought we were going to play within, and we're outside of the box now, so we're just going to get rid of that, pretend it never happened. Look, you can't get it right all the time. You stick your neck out on YouTube like I do, obviously you're going to get it wrong sometimes. And people will never let you forget it. But I can tell you now, no trader is 100% perfect. So anyway, yeah, we've lost this zone now. We've lost this. So we've also lost, obviously, the Bollinger Band Center, the 21 exponential moving average, which was highlighting the bottom of that range. So, I would be expecting a move up into it and a rejection from it. So that basically means that it's fair game to imagine that we come down to the 50 exponential, which is 58,005 or 600. Again, it's, to try and get too precise on such large numbers is kind of crazy. And I moved back up to the top of this range, 65,150. So this is our new range for the moment. And we could easily break up and test the $67,000 range, which is your Bollinger Band Center. Let's have a little look at momentum on the shorter term moving averages. So we've got still this uptrend. We're getting picked up from a 200 simple and exponential at the moment, which is all part of a golden cross retest, which you'd expect to see some kind of reaction. On a normal day, you see these things and you expect a V-shaped recovery. And it is the truth of the matter. That is the truth. But obviously, you've got a lot of ground to make up. You've got all these moving averages. You've got 10, 21, 20, 50, 50, and that's just the 4-hourly. You've got the dailies as well. But yeah, it still points to 65,000 at some point today, I would say. Any bull div, tiny little fraction, the smallest little piece. But it is there. Same bull div on the money flow index, which is good. So let's take it down a notch now to the 1-hourly, where we did have quite a lot of bullish divergence, and this one might be playing out to push us up to that top of that trend line, really. So in the immediate time, we're pushing this resistance on the 1-hourly, 63,200, break that, 65,400, and hopefully further up. There's no reason to get massively bullish on what we're looking at right now. It is a pullback, it is continuing to pull back, but I wouldn't also get massively bearish on it either. I think for the most part, it's performed the majority of its pullback by now. We've done 17. We were assuming 20 at best, and I suppose if it really does go tits up, we're talking all the way down to your 200 exponential down here into the mid 40s, really. But that sort of thing won't happen straight away, not unless there's some chaos calamity event that takes place. There is an FOMC meeting today, I have to say, but it's nothing. I'll be very surprised to see it cause that kind of devastation. Let's have a look at the dominance chart. They're basically hanging around in no man's land, really. It's above all moving averages on the weekly, which is good. So it does suggest further upside on dominance chart. Again, a rejection today, even from the top of this trend line, and a support back down to the moving averages on the daily and the 4-hourly. Pretty much above all moving averages as well. So I do prefer the idea of this moving up if you're going to treat it like a normal chart. Let's have a look at the Dixie. So the Dixie is actually quite bullish at this stage now because it's managed to reclaim all moving averages, working on those golden crosses on the 4-hourly, and the next major horizontal level of significance is 104.2. So that's where we're likely to be heading today, and I would expect volatility given the FOMC. Quick look at Ethereum then before we go. Wow, Ethereum really got slapped in the face here. So Ethereum's really hurting quite hard, losing all these areas, all of them, and pulled back to the tune of 25%. So it's a big deal actually. XRP actually is still looking okay, surprisingly. But yeah, let's focus on Ethereum. So there's no real reason, I would say, to expect anything significant from here. It'll be pulled up with Bitcoin, it'll be dragged down by Bitcoin, but its lack of strength, its pure weakness in the market for Ethereum, particularly for Ethereum, is bad. But it's not even a bull div on this either. Wow. Ethereum, hey? Ethereum. It's not that good anymore, is it? It's not that good. So just like Bitcoin, we can get bullish if we reclaim these zones. You've got to get it back above 3,500, I'd call it, to be safe now. And closures on a 4-hourly should have continuation and maybe back up to the top of the range. But for the moment, all of these are going to be resistance. So you should expect to be rejected at resistance. That's the rule. Never feel overconfident when you're pushing a resistance in a downtrend. Always take the profit, sell, buy the dip, sell the rip, to be honest, and that is what we've been saying for a while now. I'll save an XRP video for later. I think we'll just see how the day unfolds. It's a big day with the FOMC, and obviously we've trended down dramatically now over a series of days, and I would like to see some kind of change of behaviour at the moment, but as far as I can tell, we should only expect a lower high. And if we start to close back above Bollinger Bands on the daily for Bitcoin, the range high. My box is returned. My box is returned. Right, so I'm going to leave it with you there. Thanks for watching. If you want to join the Patreon, links in the description, Telegram as well. Otherwise, hope you have a nice day. Take it easy.